Everyone, and thank you so much for joining our webinar today. I am really excited about who we have on the phone today. We have three amazing people. So we have myself, founder and CEO of KingsCrowd, as you may know. We have Eric Satz, who is the founder and CEO of Alto IRA. We have Brian Smith, who is the co-founder and CEO of RedCrow. And we have Dr. Amir Fassi, which I probably messed up his name, who is the founder and CEO of RedCrow. This is an amazing collection of individuals who are helping to enable the online private markets and help individuals like you and I to be able to invest in really innovative and exciting startups. So today is all about getting to learn more about this ecosystem, how it works, what it's all about, how we each play a role in this ecosystem to better enable you, the individual, to get to invest in this market. So with that, I'd love to kick it off. And Eric, if you don't mind, would you just start telling us a little bit about what it is that you do at Alto IRA and how it helps people invest in startups?
No, absolutely. And first, Chris, thank you for putting this group together, and thanks for including us in the podcast. Really, really appreciate the invitation. So at Alto IRA, it's really quite simple. We're trying to make it cost-effective and easy for individual investors to access their retirement savings to invest in alternative assets, which we define as really broadly non-registered securities. More specifically, you may think of it as private equity opportunities, venture capital opportunities, real estate, crypto, private credit, marketplace loans, and of course, as we'll talk about today, some early stage opportunities. And so that's what we do at Alto. We're trying to make sure that everyone who wants the option of choosing to retire in their future actually has the option to retire in their future.
Outstanding. And I can say from doing a little bit of IRA research myself and being a fan of investing in alternatives, I quickly gave up before there was Alto IRA. I looked into it. I saw that there was a lot of papers. I saw that I had to send a lot of things in mail. There was a lot of faxes involved for some reason. And I decided to just walk away from the whole thing. So the fact that we now have an Alto IRA that's making this accessible and easy and like trading into a stock is really, really exciting. So thank you. Next, I would love to have Brian introduce himself and tell us a little bit more about RedCrow.
Sure. Thanks, Chris. It's a pleasure to be on this morning. And as Eric said, to be in this type of a setting in this group, it's very unique. And I think the attendees will see why we've all come together. But I am the CEO and co-founder of RedCrow. RedCrow was founded by myself and Jerry Harrison, my co-founder. For those of you who are music fans, Jerry is a member of Talking Heads and in the Rock Hall. And you probably wonder, how did he get here, where he's doing now early stage healthcare innovation? We can get into that. But RedCrow is a result of the 2012 Jobs Act, where new rules were put in place for private companies to now present themselves via the internet on a platform like RedCrow, and for investors to have access to early stage investments, as Eric referred to as private equity, for the first time in this way. A lot of times investors get locked out, and we are making this possible in the space of healthcare and healthcare innovation. And you'll hear a little bit from Amir at the end of the conference, which will be exciting for you to see the type of companies we're talking about. And I think we're going to get into some due diligence today, which is extremely important to RedCrow, is the level of due diligence that we actually do on the companies to make them all available to you. So it's a pleasure, Chris, and I look forward to the discussion.
Excellent. Thank you so much. And I'll just introduce myself for those of you who don't know me. I'm the founder and CEO of KingsCrowd. And you can very simply think of KingsCrowd as the Morningstar/Bloomberg rating and analytics terminal for the online private market. So it is phenomenal that we have RedCrow, but there are actually 50 plus marketplaces that are providing investment opportunities from pre-seed to pre-IPO that we can all invest in. And so what we do is we actually aggregate all of those deals from across all of the marketplaces and then put them through a vetting and due diligence process so that people can make informed investment decisions when looking at this space in an efficient manner. So really building those institutional grade tools around the marketplaces to better enable investment decision making. So one of the things that excites me so much about having someone like Alto IRA in this market is the fact that, at the end of the day, these are long-term investments typically when you're investing in private companies. So Eric, I'd love for you to just hop in and tell us a little bit more about why you think this is a really good fit to utilize an IRA when thinking about investing in alternatives.
Yeah, that's a great question, Chris. And actually, I'll just sort of go back to the Alto IRA origin story, if you will, because I think it touches on what you were just mentioning, and it explains it exactly in the way I think that most people ought to think about it, which is so prior to starting Alto, I was running a venture capital fund, and I was looking at investing in some of those portfolio companies alongside the fund. And one day I happened to be holding my IRA statement in my hand, and sort of the light bulb went off, which was like, you know what? I can't touch this money until I retire, at least not without paying a penalty. And I'm making these long-term investments in illiquid assets that, you know, I shouldn't expect to see the returns for at least 7 and maybe even as long as 10 to 12 years. These are exactly the dollars I should be using for these illiquid investments. And not only that, they come with a tax advantage to them. So if you do generate a significant return with an investment you make, you don't pay any taxes, right? You don't pay any taxes until you're taking distributions at retirement age. And so that really was the light bulb moment for us. And then, you know, in terms of whether or not we wanted to build a business out of it, we saw that there were $25 trillion sitting in retirement savings accounts, less than 2% invested in alternatives. And we really expected to see somewhere between 10 and 20%. And so we concluded that A, people didn't know how to do this or that they even could do it. B, it was too complicated and took too long. 3, it was too expensive. And so the idea was to essentially do for this asset class and opportunity the same thing that TurboTax did for self-filing. And there was one other really important part which Brian and the team at RedCrow identified, which was this macro trend of making alternative assets more accessible to mainstream America. And that came with Title III in the Jobs Act and Reg CF. And so what we have really been focused on as part of our growth is integrating our platform into other investment platforms like RedCrow, so that it's really a seamless investment experience for everyone with just a few clicks of a button and electronic signature, as opposed to all that paper fax stuff you were referring to before. So hopefully I wasn't too long-winded there.
No, not at all. And I do have one more question for you. And one thing I'd encourage everyone who's watching, if you have questions, feel free to put them into the Q&A bucket, and then we'll be happy to try and get to them throughout the webinar. But Eric, one thing that I hear from a lot of people whenever I mention and get excited about someone like Alto IRA is, oh, well, that's a great idea. Let people invest their retirement dollars into something that's so risky. So talk to me about how you think about that from an investment standpoint, and why you still think that if done the right way, it makes a lot of sense.
Sure, I'll give you my polite answer, which is that the conventional wisdom about this opportunity space is completely wrong. Think about it this way. This is money that these assets and these investment opportunities, just by their very nature, are long-term investments. They're illiquid. So, you know, there's been a lot over the last several years about how people couldn't access $400 if they needed to, right? For a health scare, or your car breaks down, or whatever it may be. So if what you're doing is taking your after-tax money and investing it in illiquid long-term assets, and you have this, you know, unfortunate event which requires you to access money on a short-term basis, if you try to go into your retirement savings to access that money, not only are you paying taxes when you do, but you're also paying a penalty. So the dollars you should be using for a long-term investment are the ones that you can't touch anyway. You know, leave your dollars that are invested in public securities, leave those there for emergency purposes. You're getting a lower return on your investment to begin with because because of the liquidity capability that's provided there. So if you ask me to, you know, say again what I started with, the conventional wisdom here is just backwards.
Makes sense. My other viewpoint on it is that, look, They are long-term investments. And at the end of the day, you build a diversified portfolio. You take the time to diligence the companies, and you expect some of them to fail. You expect some to do well. And you are thinking about this on a long-term horizon where if 3 or 4 fail now, well, hopefully this is a portfolio that you're waiting 20, 30 years out. So you have time to make up for those that lose and then have those winners actually help make the portfolio work out.
Chris, if I may, that's a great point, because I don't want anyone to think that we're saying bet it all on red.
Right.
I mean, you can go to Vegas for that, right? What we're saying is actually spread it across a basket of alternatives, and the basket of alternatives should occupy somewhere between 10 and 20% of your total basket.
Right.
Right. So think about it that way. To have a truly diversified portfolio, you must include alternative assets in it. It needs to be, they need to have the capability of what we call non-correlated returns, right? So no matter what the public market does, these other assets are going to perform in a different way.
Excellent. So Brian, going to this point around diversification, going to the point around, making investments through due diligence and being careful about what it is that you're actually putting into your retirement portfolio. Talk to us about your experience leading up to RedCrow when you're working at Morgan Stanley, and then how you guys think about vetting companies and bringing them onto the platform before they can raise capital from individual investors.
Yeah, absolutely, Chris. I think when I was at Morgan Stanley, so I was a financial advisor working there with a family office group, so ultra high net worth. And what I didn't understand at the time was that alternative investments did not consist of investing directly into a private company. There was no access to that in what we're talking about today. There was alternative funds, but oftentimes clients didn't even understand what were in those funds. And I don't even know that most of the time the financial advisors knew how the clients are actually being feed on those type of funds, some of the illiquidity that existed in these funds. And so it wasn't extremely clear. But I can tell you that my eyes were opened in 2010 when one of my clients, who was a chief of newborn medicine at Tufts, came to me about this fetal monitor device, and they were looking for funding. And they thought maybe I would have clients that would be interested in investing in it. And what I had to explain is I can't just direct my clients' funds wherever we want, and they can't just invest through me. And if they saw a company that was private that they wanted to invest in, because it was not a product that Morgan Stanley offered at the time. And so when I came across this one company and I saw what they were doing, I saw the social impact nature of it, and I knew I had clients that would understand that investment, and yet I couldn't talk to them about it. That's what sort of got my attention. And I started thinking, for me, there's more than just putting clients and high net worth folks in mutual funds, in ETFs, and in stocks and bonds. Clients should be investing in things that they truly understand, especially when we're coming out of a recession. Granted, the market's been doing really well, but where are you going to find that pop? Companies are going IPO way too late, in my opinion. The money is made in the front end when you know somebody who's got a new company and you get to be one of the first investors. And I think that's what we're trying to democratize here. And I learned about the opportunity to invest directly into these type of companies using your IRA after I left Morgan Stanley. And I was working with one of these companies, and they said, clients can't invest in their IRA. I think what Alto is doing and how they're doing it and making it more efficient is a game changer. That's why we're excited for the affiliation, because we recognize, to Eric's point, when you tell somebody here's an investment opportunity, they may be looking at their brokerage account, they may be looking at their checking account and realizing, I need this money here, or I need it invested a little more safe, maybe in bonds or in ETFs. Had they known they could use their IRA, which again, to Eric's point, it's just going to sit there. And I saw some IRAs and 401ks just blow up while I was at Morgan Stanley during that recession, when they would have been better off investing in art somewhere down the road before the recession, because in some cases, it still hasn't come back for some of those individuals. If they didn't have the right advisor putting them in the right things. So Eric, you can share with us how much money and assets are actually in IRAs, because it's a staggering amount. And if you can sprinkle some of that money into a private company, such as Amir and what he'll talk about, it can make a big difference. And I have to reiterate, it's high risk. These are investments that you could lose all your money, but this is why we say invest in things that you understand, invest in things that you know, invest in things that have been vetted and curated in particular ways. And I think between what RedCrow does and then the diligence and the reviews that KingsCrowd does, somebody looking at a company that's had the tires kicked, we're never going to guarantee anything, Chris, but I think your chances of success are better.
No, I completely agree. You know, something I've seen a few reports on this, that there's been studies done that show that, you know, if you spend 20 plus hours diligencing a company, again, if you build a diversified portfolio of about 15 to 20 investments, the odds of just failure and having a 0% return or a negative return go down drastically. Again, it's not 0%. You could still lose money, but the reality is if you build a diversified bucket of companies and you've taken the time to learn about each one and really drill down in them, that your odds of success do increase pretty dramatically, which is why, one, I appreciate so much of what RedCrow does, and I'd love to hear a little bit more about that, but also what we do, right? So we come in and we say, look, there's an entire market of opportunities that you can invest in. There are so many opportunities for you to invest across different industries, across different stages of company. And so what we do is we have, you know, we're a team of 4 people. All of us have venture capital and equity research backgrounds. We come in, we look at the companies across all of the same dimensions that a traditional VC would look at, from the size of the market to the founder's experience, to the terms of the deal and the security type being used, to the business model and understanding, you know, can it scale and be a profitable business, to looking at the product and service differentiators, understanding the landscape, who are the incumbents, how are they going to perform against them, you know, who would be an acquisition target, really understanding from market down to the guys who are executing the actual company. Do they have what it takes to become a large and successful business from where they are today? And so in doing all of that research, we basically funnel up these opportunities that are at least really interesting, right? You get rid of the noise and the things that are just kind of a mess or aren't structured right, and you get to the companies that actually matter. And from there, you can start making informed decisions. But one of the things that I love about RedCrow is that you alone will actually go in and do an incredible amount of due diligence. And one of the things we always call out when it comes to healthcare companies is that there is an extremely high level of risk, especially if it's a biotech or even a med tech device company, because of their approvals required through regulation to actually go into market. So talk to us a little bit about that, Brian, how you guys look at these healthcare deals and what you do to vet them out before you make those opportunities available to the individual. Well,
Chris, I think the biggest thing is the disruption that we've created in the vetting process. And I'll talk to this because there's a formula here, especially before it even gets to an organization like KingsCrowd to then kick the tires on a company like Amnion Life, is we bring companies in onto the platform, and we have on redcrow.com, there's a section called Discover Supernovas. There's a real low barrier to entry for these companies to come onto the platform. We allow them to come on so we can get feedback from the greater crowd and so that they can get feedback from the greater crowd. And when I'm talking the greater crowd, I'm talking to anyone from all over the world who can come to our platform, has an interest in healthcare, likes healthcare. We've recently created a collaboration with the AMA, and all the physicians on the AMA, we invite them to come in and look at these companies, take surveys, leave us comments, rate the company. So you've got this crowdsourced, as we call it, the wisdom of the crowd feedback. And we have an internal team of healthcare professionals, business analysts. Our managing director, Dr. Oren Chars, who was an anesthesiologist for 25 years, has made a transition into business, has been investing for years. He oversees that process. And I will say what's amazing about that, Chris, is as tight as the internal vetting is that we do, it will never compare to this greater crowd giving us this early feedback. And I love it because what we've done is we've created transparency for all these companies. Because if you put something on our site, you make a claim and maybe it's not accurate, there's too many people in the healthcare industry that are going to see that and going to call attention to it. So when we invite companies up and they learn about our process and they refuse to come up, well, what ends up happening is we think that maybe they don't like the level of transparency that's being created. And I think that's really important. And it's just another way of the Jobs Act saying, you know, it's a crowdsourced, it's wisdom of the crowd, and be very careful about what you invest in at the same time. And I can tell you, not all platforms do this level of diligence, especially tapping into the crowd. But when you're in healthcare, we have a knowledgeable crowd. You know, we have from, you know, MDs that have been in practice for years to new students coming out, leaving comments.
Nice. No, that's awesome. And, you know, it's one of the things that I saw in the traditional private equity world is, as much as people think that's smart money, the deals that get done when no disclosures are being made is absolutely absurd, right? It's why you end up with a Theranos. It's why you end up with a WeWork, where the whole thing is a sham, but everyone can kind of keep the thing floating and looking good as long as you're raising capital and hiding the underlying problems. In this market, with the level of transparency, I think we drive to a better quality of company in many instances.
But Chris, this is why we love KingsCrowd. It's because we will stand by our crowd's feedback, our internal feedback. We want to hand it over to you, and if you've got issues with it, if you've got comments, if we want to be able to address that, hear it. You know, it can't, even though we've got this, you know, very large crowd that comes to RedCrow and participates and continues to grow, we still want third parties from wherever to come in and you know, question Amir and ask Amir about something, or do an independent write-up. Even if we think it's the greatest company, we're not broker dealers, so we're never gonna go out there and promote it in a way where someone should invest in it. We just want to put the best companies forth for investors to consider. And I think that this is why, you know, between what you do, what we do, and then having Eric and Alto being able to facilitate these investments, it's really changing the world of private equity.
No, absolutely. And Eric, I do have one more question for you before we jump in with questions for Amir. So one of the other major things about traditional private equity is that there are often large fees associated with making those investments or being invested in a fund or what have you. So talk to me a little bit about the Alto structure from a fee standpoint and how you make it more efficient for investors utilizing an Alto account.
Yeah, so, you know, it's a really interesting question, Chris, because our fee structure is actually changing, excuse me, is changing on January 1st. And it's changing because we built a pricing plan that was meant to give the investor every benefit of the doubt, regardless of the number of transactions they wanted to make or the size of the transactions. And what we heard back was, it's too complicated to figure out. Even though they always got the benefit, it was too complicated. And if someone can't understand something, then that doesn't work. It just, you know, it defeats the purpose. And so on January 1, we're going to a very simple plan where we charge in two ways. We charge every time you make a transaction, and there's a fee, there's a transaction fee associated with that based on the size of the transaction. And then there's an annual account fee. And again, the way we structured this is it goes from $5 a month up to $30 per month, depending upon account size. But the other thing that I want to point out is that transactions will actually be free for investments. Is it less than 10,000? Less than 10? Less than 5,000. For investments less than $5,000, transactions will be free. And so if you're participating on a RedCrow or another investment platform and you're building a diversified portfolio, and so maybe you're only investing $2,000, $3,000, $5,000 at a time, those investments are free, right? And what that is meant to incentivize is just that, the diversification of assets across a basket of goods. And so that's the direction we're headed in.
Got it. And one last thing I did want to make sure we covered. So while I believe very strongly in investing in private equity, there are also other things that you are providing people the opportunity to invest in. So could you just hit on those quickly, what those other opportunities are for people to invest in?
Yeah, so if you can think of an asset class that's not a publicly registered security, we pretty much give you the ability to invest in it. So it could be real estate, it could be private credit, could be marketplace loan, could be litigation finance, could be a collectible automobile or a piece of art, or $35,000 pair of sneakers, could be wine, depending on whether or not it's securitized and fractionalized. And then, of course, there are cryptocurrencies for those who are interested in crypto. So we have an integration with Coinbase that's just launched in an alpha version. I do want to point out it has a different fee schedule than the traditional IRA account. But it's incredibly advantageous relative to anything else available in the marketplace from a pricing perspective, and you're trading directly on Coinbase, which we think gives investors some level of comfort. So you pick an asset class, we'll help you get it done.
Nice. So what I would say to everyone watching is, if you thought by watching this webinar you had yourself covered, unfortunately, you're probably not. There is a whole lot of opportunities that are now presenting itself because of technology and regulation that's enabling you to invest in a plethora of different alternatives, which I think is so incredibly cool and really makes what we do very valuable. Yeah, go ahead.
Yeah, so the one thing I want to add there is and I just touched on it, it's the emphasis on the fractionalization of ownership. And so if you think about, if you wanted to participate in the real estate sector in the past, you had to have enough money to either buy a building outright or enough money to, in addition, get a loan to buy the building outright. Now you can own 2%, 3%, 5%, 10% of that same building and have none of the landlord CapEx maintenance headache associated with it. And so it's this fractionalization capability together with securitization that is making alternative assets available to everyone. And we think that's exciting.
No, I think it's outstanding. So the last thing that we love to do is present to you one of the investment opportunities that you actually have available through the RedCrow platform, and gives you kind of an example of what's possible when looking in this market, the companies you can find. So we're fortunately joined by Amir, who will tell us a little bit more about Amnion Life and what he's building and helping to solve an incredibly important and profound problem. And we're really excited to hear a bit more about his technology. So with that, Amir, would you please tell us a little bit more about yourself and what it is you're building at Amnion Life?
Thank you, Chris, and everyone. It's a privilege to be here in this group. I will talk about Amnion in a little bit, but I also want to just finish this conversation because there's a couple of things that apply to us. On the due diligence aspect, which was talked about, it took us a long time to get here. It wasn't an overnight, and even when we got to the point that we were qualified to undergo due diligence, the due diligence itself took a long time. So it's really a privilege to be here in this group and amongst you. Amnion Life is part of the ecosystem. It's an opportunity, as you said. We are an early stage company. We develop novel and innovative products for preterm infants, especially very preterm and extreme preterm infants. And these products, there are 3 products we're working on right now. One is called AmnioBed Golden Hour, which is immediately in the labor and delivery units, immediately after birth, for up to 1 hour transitional period. Then there's AmnioBed 24 hours, where infants can stay there for 24 hours or more days or weeks. And then the third product is artificial placenta, which is an oxygenation and nutrition machine, which will complete the artificial womb that we're developing. And just to give you some brief numbers of what we do and what this is all about, preterm birth is the #1 cause of infant death in the United States. And per World Health Organization is the #1 death of babies globally less than 5 years of age, which really it's really mind-boggling, because you think of children's death globally, you think of infectious diseases. And when you think of a disease that we're really up there in amount of death, mortality, morbidity globally, it really puts the onus of a responsibility for us to do the best that we can to really overcome this challenge, global challenge in healthcare. And the reason being, the reason these infants have there's such negative consequences, infant death, is that these infants, especially in the 6th and 7th month of pregnancy, they're not ready. Their body's not ready for the outside womb environment. about 50% of them in the first hour, their body temperature can drop more than 1 Celsius degrees. And you can imagine if any of us, our core temperature drops 1 Celsius, throw us in a freezing lake, what can happen? It's a shock reaction, stress reaction. And they undergo that stress reaction within minutes of birth, which causes all kinds of negative calamities. They are like cold-blooded animals. They don't have temperature regulation in their body, so their temperature can drop. And to maintain that temperature is the first and foremost goal of the Amnion bed. And we think we can significantly decrease episodes of hypothermia, which is 25 to 78% depending on their weight. And those episodes of hypothermia are associated with everything from mild intellectual disability to severe cerebral palsy. These are lifelong consequences, sepsis, death in the short term. And as far as the potential, I don't know if I should get into more detail. I know we just a minute or two. I think I'll just leave it open to Q&A, and then if you want, I can share some images or slides if there's time. I just wanted to give a brief
I really appreciate that. So one thing that I would love to understand, and then Eric, feel free to jump in with questions as well, is, I mean, there's been no innovation in this space to date. Like, it's amazing to me that the only thing we have is like this little incubator bed that is so extreme, especially for a preterm infant to have to go in and experience. So why has there been no developments to date, and how does this take it 10x forward from where it is today?
That's a great question. I think part of the reason that we haven't had the innovation has to do with the lack of the ecosystem that we talked about. The funding is a big challenge in medical device industry, and has always been a challenge to have new innovation. And innovation like this takes a number of years, so which we discuss why the investments like these are best to have them use an IRA, because they're going to take a long time. And it's too risky for a big company, and it's too difficult for a small, one person to go through the whole track. Even before the Jobs Act, 2012, a company like this would raise hundreds of thousands of dollars from friends and family. We raised quite more. We'd raised up to $1.1 million from friends and family, and then would be in a desert void where they either had they had the opportunity to get a venture capital, or it would be death. There was nothing else to do. And many medical device innovations have died, and would have still died if it wasn't for the wisdom of the crowd, the crowdsourcing, the investment of the crowd, the democratization of investment, as Brian pointed out. And we are privileged to be in a new ecosystem where an innovation like this, that it takes so complex, it takes much more than what a friends and family can afford to do, now has access to the crowd. And when I saw Amnion, when we were going 3 years ago when I started, I realized the whole Jobs Act is going to change everything, and I wanted to be part of this revolution. I really think we're at a revolution in entrepreneurship that is going to change the way funding for the pre-seed to pre-IPO track is going to be mending and changing very much. And I wanted to be part of this. And as part of this, we had to go through the friends and family. Then we went through a crowd CF round where it was a lot less diligence as the current round under RedCrow. You and I remember started working with each other when I first had the crowd CF. It was a smaller investments, $100. We had to prove ourselves there, move on to this new ecosystem where there's a lot more due diligence. Now we have the opportunity to take the venture capital. Innovation like this, apart from the technology of it, it is a difficult, very complex device, multiple subsystems, software, hardware, which 20 years ago would have been very difficult. But aside from that, even if we had that, the funding mechanism, the investment mechanism wasn't there. And that's another key that's being developed today that allows innovation like this to get to the market.
Excellent. Eric, do you have any questions?
So it's not so much a question as much as asking for a description, because I think it would be helpful for, at least it was really helpful for me, but I think it would be helpful for others to hear, Amir, exactly how this works and sort of the way what you're doing recreates the environments for the infants that, had they not been born early, would still be experiencing with the mother.
Okay, let me, if you don't mind, I'm going to share screens because a picture is worth 1,000 words sometimes. And I'm going to just show you an image of Amnion. So when we're talking about, excuse me, let me just show an image of what this looks like. So this is what this device looks like. It's a device that goes into labor and delivery units and the NICU. The infant, as you can see, is partially submerged. So it looks like a bath. And the importance of this is that the head and neck in our device is always maintained outside of the fluid line. And the main function of this device itself is just to recreate the amniotic fluid sac environment, and mostly for temperature management and fluid management. These infants, as I mentioned earlier, when they're born, their body is not ready for the outside environment. They're like cold-blooded animals. They have very thin skin. They don't have subcutaneous fat to insulate them from heat loss. Their body surface area is really high compared to their mass. So they start losing heat very rapidly within minutes of birth. And the first thing our devices does is keep them warm. The current technology, it's radiant warmers with a plastic wrap. So currently these infants are placed in plastic, or they're wrapped in plastic, then they're placed under heat lamps. That is the best that we have, the best technology that we have right now, believe it or not. It was purchased by GE in 2013. I'll give you what it looks like. This is what the current, this is the incubator, but the radiant warmers are similar to this, except that the heat component above this. So what we're doing is we're disrupting this market, which is the incubator market. GE sells 5,000 of these a year. And we've done our numbers is basically with 1,400 units operational after 5 years, which is about 300 units a year. We can have a revenue of $150 million of this. And you can imagine a IP like this in hands of GE, where they sell 5,000 units a year, is tremendous opportunity. So basically what we do is that we instead of placing the infants back on the mattress, we put them into the fluid environment. The fluid is a synthetic amniotic fluid that's created by the device itself. The device has multiple filtration units, sensors, dosing pumps, has cartridges where the crystalloid solution is mixed with purified water. The water is heated, continuously monitored, refreshed. If there is stool, it can be flushed. And then the other device is the artificial womb gets attached to the umbilical vessels, where they provide the oxygenation and nutrition, which are two of the other big issues in these infants, because the lungs and the GI tract does not develop adequately. And we managed to get the IP, the multiple patents now on Amnion, on artificial placenta. We have novel ways to when we went through the due diligence with RedCrow, there were all these questions, because all from medical teams looked at us, from business development aspect looked at us. How do you keep the umbilical vessels, the catheters safe? How do you keep the fluid in a safe way? All of these have been worked out for the last 3 years, and is what we've had to go through in order to get to the clinical trials. We're still about 12 months away from clinical trials. We need to make sure this is a safe device, all the verification. Once we get through the clinical trials, it will be about a year after that, we'll have the FDA application ready. So end of 2021, and then about 3 years after commercialization, we're looking at exit. So this is a 5 to 7 year investment, which as Eric said, many of these investments like Amnion is perfect for IRA, because this is not money that you it's going to take a while. But the nice thing is that in an investment like this is that if we are successful, and we can have 1,500 operational units, 2,000 rest of the world. A medical device company with revenue of 150 million, the EBIT of 73 million is being traded at 10 to 15 times EBIT. So you're talking about $500 million to a $1 billion company at that point. The current valuation of 12.5 million to that is significant upside. That if if, as Eric said, if people try to diversify their investments into early medical device companies and, put a little bit of each, the upside on each one of these is so high. And most of us have had to jump through so many hurdles to get to this point, to even be able to be on a platform on RedCrow. So we've had to take a lot of the risk off the table in the IP, the prototyping, team building, engineering, a lot of the questions on clinical aspect of it. So that's a nut job. I hope I answered the question well, succinctly and succinctly.
Excellent. Well, thank you very much. That was really, really helpful. From our perspective, I think the big things and why we rated it a top deal here at KingsCrowd was large market opportunity, incredibly large unmet need, very innovative product and solution that has nothing even close to it from a tech standpoint, and they're getting the right IP to protect it. They have a very experienced founder at the helm who knows a very large amount about what it is that he's building, has been at it for a long time. And we see an opportunity for a potential exit that could be really valuable for investors. So with that, we got excited about the opportunity and think it from a social impact standpoint, it's also pretty exceptional. So to kind of finish this out, if anyone, Brian or Eric, if you have any last comments, happy to take them. And then I think we'll wrap it up.
Yeah, Chris, I think that we probably have several companies that are considering RedCrow that are watching this, and a few that will see it. So my question really is for Eric. Eric, can you explain a little, if I'm a company, how do I get approved on the Alto platform where I can actually accept IRA investments?
So there are two different ways, and it depends whether you're raising money directly or whether you're working through one of our platform partners, right? And so if you're a company that's raising money directly, you create what's called an issuer account on the Alto IRA platform. You upload all of the relevant deal documentation, and we walk you through that. And then with that, you've established your own deal library, and you have the ability to share it with whatever population of investors you'd like to share it with. So it's a private deal library, meaning you have to provide access or an introduction, but there's no limit to the number of invitations. If you're working through a platform partner that's fully integrated with us, you may not actually have to do anything. All of those deal documentation, all of that deal documentation and the account creation may happen essentially with an API integration, so that there's no extra work whatsoever on your part. It all depends on the level of integration that's been achieved with the platform partner.
Excellent. Brian, any other thoughts?
Yeah, that's great, Eric. Thank you. And then my last piece would be, we handle that on the investor side. If an investor comes to RedCrow, they see a company, when they go to invest, we give them the option to click IRA, indicating they want to invest through their IRA. And then we facilitate that directly through the platform with Alto. But also, Eric, I think what I've had questions before from individuals when we talk about this, and again, I think it'd be great just for you to confirm, but there's been confusion in the past. Well, my IRA is at Fidelity and I want to invest in, say, Amnion Life. Do I have to move my entire IRA from Fidelity to Alto?
That's a great question. So no, you don't. We make it really easy for you to transfer whatever cash essentially that you want to transfer from, in this case, Fidelity to Alto. And then that is the cash that is used to invest on the RedCrow platform. So you don't have to move the whole thing at all.
And then you guys hold in custodial the stock certificate or the whatever the holding is, a statement they receive.
That's correct. So, you know, what the IRS, what's required with ERISA and what the IRS is looking for is that the custodian holds title to the security. So, Brian, if you're the investor, it'll say Alto IRA custodian for the benefit of Brian Smith's IRA, right? And so we're title on the security, and that's the way it works. And I think it's also important to note for people that when you transfer from one IRA account, wherever your existing custodian is, to Alto IRA, there are no tax consequences in doing that.
Fantastic.
Excellent. Well, thank you everyone for joining. This has been really terrific. I think the takeaway for me is if you're looking for a diligence partner, that's what we do here at KingsCrowd. If you're looking to find amazing healthcare deals, that's what they do over at RedCrow. And if you're looking to do it tax efficiently and with dollars that you have in your retirement account anyway, Alto IRA can help you do that. And I think Amir is a pretty phenomenal founder and definitely someone worth looking into further.
Thank you, Chris. Thank you, everyone.
Yeah, thank you guys. Outstanding. Well, it's been a pleasure chatting with you all. And thanks for joining us today. Take care.
Thank
Chris,
you.
thanks for having us.
Bye now. You got it.